Hello, all you crypto guys out there, and crypto lovers, and crypto gals, and crypto guys, and everybody out there. Thank you for tuning into my show. I'm really glad to have you guys here. Now, this is November 11th. It's a Monday. Crypto is going along sideways a little bit, but you know, it's doing really good. It's holding its value well above $200 billion for the industry. When investors now have become what's called risk on. What happened was, investors saw dark storm clouds coming. They looked up in the sky and they saw dark storm clouds coming in the form of a recession. It was in all the newspapers and everything, right? In all the media. When we had the yield curve inversion. And they got a little bit frightened. Run into gold and silver. Buy it up, right? But the very next day, the sun comes out a little bit again. They say, okay, risk on again. We're going to go back into the stock market. We're going to go here. We're going to go there. And they drop their gold and silver. You know, and they also, now that the prices come down some on gold and silver, they also going back to that old bearish sentiment on it. You know, they're becoming very bearish. So they're so fickle. They're so fickle, guys. First one day, they're like, wow, we got to get some gold and silver. And then the next day, they're like, heck with the gold and silver. Drop it. Let's go back to the ETFs, exchange traded funds, or the collateralized debt obligations, or the money market accounts, or whatever place they're working at in this financial system that's a paper monopoly game. I'm going to tell you guys, everything in this financial system, all these paper assets that are connected to the dollar, is a giant monopoly game. And even worse, in a monopoly game doesn't necessarily have to be a Ponzi scheme. This is a monopoly game Ponzi scheme. And the yield curve inversion was a huge symptom, almost like if you're near a big volcano or something and you feel the ground rumbling. Then the ground stops rumbling and everybody goes back to work. This is what happened at Pompeii. You know, they had their little warnings ahead of time. The ground started rumbling a little bit. You know, they felt a few earth tremors and they saw a bit of smoke coming from the volcano. But then everything settled back down again and they were like, hey, you know what? Everything's good again. Guys, let's go back to plowing the field or whatever. That was a warning. Well, the yield curve inversion is a huge warning shouting at investors, and they heeded it for a little while, and they started to go into safe haven assets. Like gold, silver, crypto. Now the sun's come out again, the ground settled back down, nothing's shaking anymore. They think everything's great in the financial system. Oh, we're in this economic recovery business again. And the gold rally's over. And they're dumping, and now gold prices fell back down again. You know? It's the calm before the storm right now. The financial storm. I do not, no way on this earth, seeing us making it through this next election cycle before the system falls to pieces. And, you know, this is the biggest threat to Donald Trump getting reelected. This is the big threat. The big threat is the big economic crisis. And, you know, I don't see us making it through the election cycle. I see it falling apart sometime in 2020. And falling apart big time. And I see a mad rush into gold and silver coming. How it's going to play out is, and I'll be very specific about how this is going to play out. We're going to see a downturn, a sudden, swift downturn in everything. It's going to come out of nowhere. It could be Deutsche Bank going down. It could be the Chinese economy giving really bad numbers coming up. Could be Italy, but I don't think so. They're going to keep Italy running at any cost. They're just going to keep trickling money into Italy. But one of these things is going to trigger, and we're going to get a huge, sharp downturn in the markets, probably sometime into the new year. what's going to happen during that downturn is probably going to be, at the initial part of it's probably going to be bearish for everything. Gold, silver, cryptocurrencies, everything. Bearish. It's not going to last very long because it's going to be so severe. I can see the market falling 1,000 points a day. And them actually possibly even having to close it. Banks going down. Everything's starting to go down. Turning over worse than 2008. The world's central banks then will be forced into action. And I call it the Great Print. They're going to be forced into action. When they take this action, everything's going to turn around. It's going to be a sudden turnaround in everything. That's when everything's going to start taking off. The stock market's going to start taking off again. It'll probably be bottom when it does. Gold and silver will be at the bottom when they take off. Cryptocurrencies will be at the bottom when they take off. So you know what a real smart investor would do? It'd be to wait for this downturn in the economy and downturn in prices of everything and get out and buy some of these. But you might not be able to be quick enough. This is the problem. Because when the Fed comes out and reacts, the Fed could react very swiftly to all of this. They could react the same day. In other words, we get a very sharp downturn, the stock market falls several thousand points in one day, and the very next day the Fed reacts. And you just don't have time to really take advantage of it unless you're one of these traders that has some sort of has connections and stuff and knows exactly how to do this stuff, how to get in the market in a nanosecond. In other words, they can set their orders and everything, and they can buy in a nanosecond. Unless you're one of those guys that can do that kind of trading, if you're like me, I'm the kind of guy, I see the prices going down, I say, gee, maybe I should get in there and buy some of that. By the time I get ready, it's already went back up again or whatever in price. No, this might all happen so fast, you just can't get in there to take advantage of any of it. And so then the prices are going to start shooting to the moon after the Fed reacts. This is what's going to start the inflation coming when they react. And this is going to be rocket fuel for gold, silver, and cryptocurrencies. It's going to last a while. Because these programs that they'll put in during the Great Print, they'll even expand upon these programs. And things will go along for a couple years this way with moderate to high inflation. You want to know what the inflation's going to be like? It's going to be like the inflation that we had in the dollar in the 1970s. 1970s style inflation. And it's going to last a while. But what it's going to do is it's going to build up these asset bubbles even bigger. They're going to re-blow up all of these asset bubbles bigger than they ever were before. And after about see, these cycles are coming faster and faster. The first one, 2008, lasted till now. But this next one will take so much more energy to prop up these asset bubbles that it's going to blow them up so much bigger again that they're going to pop quicker. So probably 2 or 3 years at the most it'll last. And then these asset bubbles, everything's going to start to burst again. And they're going to have to step in that much more. It's that time they step in. Not this time coming up in 2020 or 2021. It's not this time they step in. It's the following time, a couple years later. 2 or 3 years later. That's when they're going to cause the actual hyperinflation. This time they're going to cause inflation. Inflation like you've never seen before. But the next time they have to do it, step in with an even greater Great Print, that's when they're going to cause actual really hyperinflation. The kind of inflation where you go to bed one night and say it costs $1 million to buy an apple, and you wake up the next morning and it costs $2 million to buy an apple. That kind of inflation. The kind of inflation where they just keep having to add zeros. Add more and more zeros. They'll get out to the point where it'll pay off the United States national debt in the end. The hyperinflation will pay it off because by the time it costs $100 trillion for an apple, your outstanding United States national debt's not going to seem that big anymore. But at that point, you know, they're able to keep the governments and everything up and running by paying everybody in worthless dollars. But I guess people figure it's better to work for worthless dollars than to get nothing at all. You know, people will continue to stick with a hyperinflating system. Venezuela, Zimbabwe, these countries prove that people will stick with a hyperinflating system and they'll endure through the poverty and they'll still want money. Even though they got to carry it in a wheelbarrow, they'll still want money, you know. Ultimately, in the end, though, it gets so wacko that they have to do a reset. And that's what comes at the very end, you know. And what's going to happen is they're going to have to go back to hard assets. And by that time, cryptocurrency will probably be considered a hard asset. Because it's not a deflation, it's a deflationary currency. It deflates. There's less Bitcoin every year than there was the year before. And after a certain period of time, it's going to take on the aspect of the best money in the world. Probably even better than gold and silver because it can be transferred quickly across the internet, and gold and silver can't. I hate the gold and silver guys out there. Hate to hear me say that, but Bitcoin has advantages over gold and silver. I'll tell you, I've sent a lot of transactions with the cryptocurrencies back and forth. I mean, I was working with these. Some of these coins have died that I was working. One of the funniest coins I worked with was a coin that was named after one of the rap singers. You know. He actually had a coin. It was called Coiny coin. It was called, and I mined some of them, right? And I've sent transactions through wallets. I've never had a Bitcoin or a cryptocurrency transaction fail if you get the address right. Yeah, if you miss one number or one letter in the address, you know, the thing can fail, but I've never had them fail. It's foolproof. Bitcoin, since it's been introduced in 2009 till now, has never actually had a failure on the Bitcoin network, unless human error is the only way it fails. It's foolproof. Nobody's ever really hacked Bitcoin itself. They've got into exchanges and stuff, but it's always been an inside job where they got the private keys or whatever from the person that owned the exchange or whatever. You know, it's like, and so it's never really, it's foolproof. What's not foolproof is the cash you got in your pocket. You know, I mean, ever since the beginning of time, that's been used for shady purchases. It's been used, cash has got the most terrible reputation of anything on earth. Far worse reputation than cryptocurrencies. But, you know, they're going into negative interest rates. They're going to try it out, and they ain't going to work. They ain't going to work, guys. So we got a bright future ahead for cryptocurrencies. An absolutely astoundingly bright future ahead for them. In this system where the people who are in charge of our currencies and in charge of our money have abused the system in a Ponzi scheme. How is it all going to end? It's not going to end pretty. But cryptocurrency is going to take advantage of this. Thank you guys for listening. Like and subscribe. Give me a thumbs up. We'll catch you guys in the next show. Bye-bye.